Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Boyajan, currency analyst, and today is Monday, November 13th, 2017. Today we're going to be looking at the dollar yen, the euro dollar, the pound dollar, and the euro pound pairs. Let's start first with dollar yen. We can see here on the daily chart, dollar yen is currently in a neutral bias with RSI more or less flat above the 50 neutral level. Prices have retreated from that 8-month high of 114.73 we saw earlier in November. In order to regain upside momentum, prices would need to break above the 114 handle, which would be the 61.8% Fibonacci retracement of the down leg from 114.73 to 113.08. A break above 114 could set the path towards that 8 months peak of 114.73 and a successful challenge of that level. We could see the 115.75 level coming into sight as a possible resistance area. At the moment, though, prices are very near that 1.5 week low of 113.08 from last week. That level could again act as immediate support level. A break below that, we could see prices heading towards the 50-day moving average at 112.40, and a drop below that level would shift the near-term bias to a bearish one. And then not too far below that, we have the 200-day moving average and the low from October of 111.64. A break below that level would shift the current rather fairly bullish medium-term outlook to a bearish one. Let's move on to euro dollar now. We can see that there is resistance at the moment coming from that neckline around 1.1660. The near-term bias is neutral with a slight downside risk. RSI is slightly in negative territory. Further losses, we could see support coming from the 78.6% Fibonacci retracement of the up leg from 1.1574 to 1.1689 at around the 1.16 handle. A drop below that level, we could see a euro dollar once again targeting the lows below 1.16. We had the low late in October 1.1574. That was breached in November 1.1553. That's a 3.5 months low, and then below that we could see a potential support coming from the 1.15 handle, and then further down at 1.1385. But if we do see prices heading back up again, the next resistance, if they successfully manage to break above the resistance around 1.1660, then we could see prices targeting 1.1689. That was the peak from early November, and then a break above that we could see there's the 50-day moving average around 1.1780. A break above that would shift the near-term bias much more bullish, and could also potentially reinforce the bullish outlook in the medium term as well. Although for a more convincing return to a bullish phase, prices would really need to break above the 1.19 handle, which is just above that peak from early October. Moving now on to pound dollar, the pair is still stuck in a range between 1.3340 and 1.3026. There is immediate resistance coming at the moment at the red Tenkan Sen line at around 1.3180. A break above that, we could see another resistance coming just at the bottom of the cloud at 1.3210. Prices would really need to break above the 50-day moving average to shift the bias back to a bullish one. At the moment, we can see the near-term bias is slightly tilted to the downside, with RSI close to 50, but just slightly trending downwards. A break above the top of the range, 1.3340, would shift the bias to more decisively bullish, whereas a break below the current range at 1.3026, the bottom of the range at 1.3026, would shift the bias to a bearish one. On the upside, we could see resistance, and funnily enough, first let me just point out that 1.3340 is also the 50% Fibonacci of the down leg from 1.3656 to 1.3026, so that holds quite a bit of significance. A break above that would definitely signal a very strong return to a very strong upside momentum for pound dollar, with the next key resistance levels coming at 1.3415 and 1.3520. To the downside, the 200-day moving average is not too far away from the bottom of the range. At the 200-day one is currently at 1.2870. A break below that could potentially signal a shift of the medium-term outlook to a bearish one, although at the moment both the near-term and medium-term outlooks are looking fairly neutral. And finally, looking at Euro-Pound, the pair has regained upside momentum in the near term. We can see prices have just broken above the 50-day moving average today. RSI has broken above 50 neutral level. It's currently pointing upwards just about. So we do have upside momentum. Further upside, we could see prices targeting that peak in early November of 0.8938. A break above that, we could see prices targeting 0.9020. Now that's also another key resistance level, because that is the 50% Fibonacci retracement of the down leg from 0.9306 to 0.8732. We could see that that level acted as resistance several times in the past as well. So a break above that would signal a possible return to a bullish outlook in the medium term, with the next key resistance levels coming at 0.9085 and 0.9180. Looking at the more near-term picture, though, we could see immediate support coming at 0.8835. That's the 50% Fibonacci retracement of the up leg from 0.8730 to 0.8938. Below that 50% Fibonacci at 0.8835, we have the 200-day moving average at around 0.8775. If prices break below the 200-day moving average, we could see that low of 0.8732. That was a 4.5 month low. That could again be tested, and then a breach of that level would signal a shift to a bearish outlook in the medium term. That's it from me. Thank you very much for watching, and have a great day.